Today is March 4th, 2016, and this is the weekly ADMIS Market Review. Today we have Steve Freed, the ADMIS Vice President of Research, and also Alan Bush, ADMIS's Senior Financial Economist. Please remember that the opinions expressed here today are solely the opinions of our guests and are not the opinions of ADM Investor Services or Archer Daniels Midland Company. So Steve, it was a slow week in grains this week. What are the traders waiting for? What are they looking for?
I think the number one thing that they're looking for is weather. I mean, we were all talking about El Nino and La Nina, and we're getting closer to the growing season, and there's a lot of different forecasts. And we actually this week saw some short covering in the wheat market because of possibly too much rain over parts of the winter wheat areas, and then in the southern plains, not enough rain. So I think we're seeing a little short covering in the market because we're getting closer to the weather-sensitive markets.
When you talk about short covering, are you talking about short covering of positions by managed funds? And if that's the case, how much can that help the market?
Well, if we combine all the commodities, managed funds have the biggest short position ever in the history of trading. And so not only is it positive potentially for the grains, but these are momentum traders, and they follow the momentum of the marketplace. They look at the moving averages, and if we start trading over the moving averages in markets like copper and crude and now wheat, they will cover their shorts, and it is a big deal.
Alan, I'd like to talk to you a little bit about the Fed policy. And yesterday, of course, we had the non-farm payroll report. This morning, unemployment. Perhaps you could comment on that.
All right, well, today's employment numbers on balance did come in stronger than expected, especially the headline non-farm payroll report. Also, we had private payrolls coming in stronger than expected. One minor negative, I would have to call it maybe a bit of a weaker portion of this report, was the work week, which actually was less, and also we had the hourly earnings actually showing a decline. But on balance, the numbers showed that the economy here in the U.S. is growing, and it is likely to support stock index futures.
Turning to the dollar, after making a one-month high earlier in the week, the U.S. dollar suffered a setback at midweek. What is the outlook for the U.S. dollar now?
Well, yes, that is correct. We did see a little pressure earlier in the beginning of last month, but since then there has been some recovery, and we do feel that with the Fed likely to raise interest rates at least one more time, probably at the December meeting, that the dollar index will continue to advance. Also, we do find value in the June dollar index around the 97.10 area, which is actually not that much lower than where we are currently. So I would be looking to buy the dollar index just a little bit lower, and I think this is a trend for the dollar that can continue for the balance of this year.
Some analysts are saying that the metals markets may be heating up a little bit. Could you please comment on that, Steve?
Yeah, I think that we're watching some pretty good advances in the Chinese stock market in front of their policy meeting. And so in talking to analysts, they believe that copper is probably the first market that they would buy. We've broken out on the upside, and it looks like copper could move higher, and it's very sensitive to the Chinese economy, and if it's bottoming. They also would be buying gold. Gold is at 12 to 13 month highs, and they would consider buying gold as it continues to see more and more ETF buying coming into the marketplace.
Turning back to Alan, I know you've been bullish the stock market futures in spite of declining corporate earnings. Where do you find the value to trade stock index futures from the long side, and how high do you think the S&P futures can go?
Okay, well, first of all, we do find a good area of value in the June S&P contract coming in at the 1930 level, and that is really not that much lower than where we are right now. This is a trend I think that will last all of this year, and in spite of all of the geopolitical problems that we have seen, especially those that put pressure on the market in January, it's the interest rate environment that is likely to remain extremely bullish and likely to become even more so. So stock indices are likely to advance, I think, through this year, and I do not have an upside chart objective, but I do have a timing objective And good gains are, I would think, in the offing for the entire year, and I'm very bullish the stock index outlook.
Good. Please remember that the opinions expressed here today are solely the opinions of our guests and are not the opinions of ADM Investor Services or Archer Daniels Midland Company.
Remember, if you have any questions or have any ideas that you need some risk management ideas or any more clarification on what we've talked about, go to www.admis.com.